Welcome to Banking on Community, our podcast for community bankers. This is where we talk about trends, technologies, strategies driving the industry. And today we're talking about consumer trends in banking and how that intersects with topics like the rise of fintech. And we also have a special guest on the episode. But first, I want to highlight a couple sort of fun happenings that are going on. We mentioned this before, but CSI's yearly conference, CX25, it's just around the corner, March 31st through April 2nd in Orlando. We've already announced a ton of breakout sessions by industry experts talking about everything from AI to the economy to fraud. We also have our keynote, Sugar Ray Leonard, which I'm particularly excited about. And we've also announced some of our evening activities. So if you're interested in joining, we'd love to see you. Tara, what are you most looking forward to at CX?
Yeah, hey everybody, excited to be with you in Orlando. I'm excited we're going to have some live podcasts while we're there with industry experts on a variety of different topics throughout the two-day event. But mostly I'm excited to be with our customers and bringing so many together to bring value to our customers, being the partner that we set out to be. So excited to be with you there.
Yeah, it's so rare that we all get to be together in one collective place. I'm glad you mentioned the live podcast because that'll be an awesome opportunity for us to do this in person rather than virtually. So if you're joining us at conference, feel free to say hello as we're walking around. Also, we're planning on doing a live stream. So if you can't make it, stay tuned for that. And, I got kind of carried away there talking about everything we're going to do about CX. I didn't even introduce myself. I am Saxon Prater. I am the PR and communications manager here at CSI.
And I'm Tara Schultz, SVP of Strategic Insights and Industry Relations at CSI.
Today we're going to narrow our focus a little bit. We're going to focus on the world of consumer banking and experience that are standing out throughout the landscape of financial services. And we'll kind of see where this conversation takes us. One thing's for sure, though, we are going to miss one of our partners in crime today, Brett. He unfortunately is under the weather, so he is going to be taking a rain check today. But he'll be back soon enough.
Yeah, really miss seeing you two dress alike and leaving me out. But feel better, Brett. Feel better soon. It's like the Golden Corral of viruses out there. So a little bit of this, a little bit of that, but I'll stand in your place for this week and for this week's community banking highlight. But before we jump in, we have a special guest on today that I am very excited to have, Mary Wisniewski, editor-at-large at Cornerstone Advisors. Mary, thanks for being with us on Banking on Community. Why don't you tell everyone a little bit about yourself?
Yeah, thanks for having me on. It's a pleasure to join you all. So a little bit about me. I am an editor-at-large for Cornerstone Advisors, where I host a show called Money Isn't Everything that explores early stage fintech ideas. And they brought me on because of my less traditional path, let's say, for joining a consultancy. I've been a long time fintech reporter. I used to write at American Banker and Bankrate, and I identify as a journalist even now because I love interviewing people, but I also love the industry because it's so dramatic. And so I am someone who's still pretty creepy in the ways that I follow trends.
I love that. Well, we're extremely excited to have you on. We love following your content. You are a very fun creator, and we're excited to turn the tables a little and interview you and have a conversation around this.
Yeah.
Per usual, we do want to kick off the episode with a quick community banking highlight. And this week's shout out is for Kish Bank, a CSI customer out of State College, Pennsylvania. I actually just saw a note on Kish Bank the other day on LinkedIn about their employee-led fundraising effort called Kish for the Cure. They support local cancer-related nonprofits. They just raised another $90,000 and in total have raised over $612,000, which is amazing. So all of this goes towards research and awareness, treatment programs at local hospitals, and critical financial support for families within their community. So this to me is truly a mark of a financial institution making a difference in their community. So well done, Kish Bank. Always want to highlight one of those. So if you have others for future episodes, please shoot me a note on LinkedIn or email, and we'd love to incorporate your highlights. All right, should we dive in and chat a little bit about consumer banking and the world of fintech? What's happening around us?
Yeah, let's get to it.
Cool. All right, let's start with our guest of honor. Mary, what is catching your eye in the consumer banking market these days?
Okay, so gosh, it's so I always struggle with this question because usually a lot is catching my eye, but it's such a dramatic start to the year with everything changing in terms of like regulations and what's going down next from like the government standpoint. But what is catching my eye, or what just caught my eye recently, was Huntington Bank's. Well, I guess it came out in December, but it was only recently that American Banker did a story about it, where they are now offering caregiving banking, which like helps someone get access to someone else's account. So it's clearly a recent example of like, oh, how can I help maybe my aging parent while they still have like autonomy over their money? And it's just the latest. And, there's Charlie, which is a neobank for the over 62. I saw an announcement the other day with Careful partnering with a credit union, similar thing. So it's like, we've long heard these. We all know fraud is like outrageous and just becoming more outrageous, but like elder fraud in particular is something like on my mind and heart, just because it's just really, really sad when people lose their money, especially when they're older. So that's one thing that's on my mind.
That's really cool. I mean, it reminds me of like we've been reading a lot about sort of life cycle banking. So it's like, yes, we have, providing for the oldest of us, who might need some caregivers or people to kind of assist them. But then we also see the opposite end of the spectrum, where it's, teaching kids how to save and things like that. I think that's a really, first off, it's a really important need, but it's also a unique sort of business approach, I suppose you could say. It sounds crass when you say it that way, but way that these banks can support their communities in a better way. So that's very cool.
Well, yeah, because I think it's about like reasserting what is your value as a bank or a credit union, because it can't just be like, hey, I hold your deposits, right? Like, no, right. We've long known that. So it's like, what's the extra stuff that's making this interesting? And it could be a lot of different things. There was a neobank, or actually a real bank. I think it was Monzo, but it's like letting its customers communicate with sign language, for example. So it's like, it's just like, you got to be more, right? Like you got to be more than just holding your money. And it's usually like, hey, I'm going to at least have this one interesting feature so people are drawn to my brand. But then it's you sort of have to keep doing it, right? To get interest and actually solve people's problems, ideally.
Yeah, absolutely. I think, going back to your comments around the generational aspect and looking at the elders too, I think that aspect's so crucial, as it really helps build trust across the generations. And when you have that trust alongside the products and experiences required of those services and functions that you're talking about adding, why would they take that eventual wealth somewhere else? So I think that's key. Excellent points.
Yeah. And then to the younger folks, I mean, everything's been like changing. And I think the thing I'd highlight there that I don't see so much from the bank or credit union side yet, but it's just like speaking more toward them, or doing more short form videos, or something. I did a research report last year. We partnered with Fritch, but one thing that was certainly very true was just like how Gen Z is really sharing their like salary info, or even when they're overwhelmed by debt. And I know like personal financial management tools have largely fallen out of favor, even if we can say they ever were in favor. I am talking about like the lost in the tab situation where no one really got action in terms of like the bank or the credit union. But I think it's an interesting opportunity to like just recognize. I think obviously you got to recognize your audience and what they need. And so just like there's so many different layers to that, and it's very overwhelming. So, but you got to pick your audience and serve them.
Yeah, I think that's so well said. I mean, even beyond generations, we see all sorts of other demographic targeting that are things like we recently talked about. One of our banks opened a Spanish language branch. It's basically a bilingual branch.
Yeah.
So it's filling a need. It's something very specific that is basically they're seeing that there is an opportunity and capitalizing on it, seizing it and making sure that really they're supporting their whole community, whatever that need happens to be.
I love that you brought that up as an example, because it's like also there's an intimidation factor when you head into a branch, and like a layer in, like if English wasn't your first language, that would be extra overwhelming, I think. And I think you're starting to see at least credit unions, like some chatbots being bilingual. Hopefully more languages will come about, just because like everyone should be able to communicate in the way they want to communicate over like what is table stakes, their whole financial situation. Yeah.
And I used to be a teacher, and one of the things that we would always kind of drive home when I was going through graduate school and all of this is that it really makes a big difference to see yourself in the people that you are working with, and whatever it happens to be, education, banking, et cetera, to know that you are actually seen, and it can kind of instill a little bit of confidence as well, as far as, building these good financial habits and knowing that the bank, you actually do belong.
Yeah. And one thing, I don't know why that just made me think of it, but it's one thing I've heard, like the perks especially matter for like younger adults. So maybe like the rate doesn't even really matter as much as like, hey, you got me a discount at the local cafe that I love, like that, or like, hey, you gave me a seed to plant a tree. Like these are the things that are small but meaningful to individuals.
Yeah, absolutely. Generational difference there for sure on what matters. So,
oh my gosh, yes. Can you imagine?
Sure. My dad would not value a seed. So,
I mean, like, yeah, please give me nearly 4%, please.
Exactly.
Yeah.
So, what other types of emerging fintech solutions are banks and financial institutions across the board really underestimating or overlooking?
Oh, gosh. I'll start this just answering it more broadly. And that's just because to the earlier point of like, you've got to widen your circle. I think a lot of times, like, executives are in the same room as each other, they're playing golf. They're not identifying necessarily like, hey, this is a thing that's happening. So I would say what they're overlooking is like nuanced challenges people are up against. I know, especially like, we talk a lot about like gig workers, but it's so mainstream, and it's just like, bankers are paid traditional, like, I get paid here and there. And then it just becomes this sort of domain I think they're confused by. I read this really cool essay, and it was a while ago, but it was just like how this person quit their job and maybe was a writer, still a writer, but then got healthcare by being a crossing guard just a little bit of the week. And like, I think that's really cool. It's like, hey, you're a creative individual deciding these corporate hours aren't for you, but you're still going to figure out your benefits package by doing something maybe a couple hours a week.
I love that. I think for me, this one, I'm really loving seeing more what I'll call force multipliers on improving the customer experience holistically and the journeys across the board. So anywhere fintechs are looking at these singular problems that they're solving, how they can make the choice to build more, or they can get to market faster with a collaboration with another fintech. And the reason I love seeing more of that is the financial institutions ultimately win in that scenario. So the less the FIs have to manage multiple vendors for each problem to be solved. And I'll give you a couple of quick examples on this. I love seeing Clarivis. They brought in FenGoal recently for more transactional intelligence and real-time insight for customers. So that's awesome. That's great. I loved seeing Velocity Solutions. They brought in digital onboarding to address really a key engagement and onboarding piece of that entire deposit journey, which sometimes, as we all know, that can be left as an afterthought after 90 days. So really like all those force multipliers.
Yeah. Plus one to that, digital onboarding. It's one of those things like it's not top of mind to me. I mean, because it's always present. Like that's still like an area that needs to be improved. And it's like definitely like you got to be at the point where someone can open a basic account in a minute or under. And we're certainly not there. So room for improvement. And also like, I think it's interesting, like how the digital onboarding experience is also like including more preventative fraud things, just like how are you applying for this on your phone? I'm tracing your patterns, and I think that's a really hopeful development for the industry.
Absolutely.
I recently read a statistic that said something like 1 in 4 consumers are basically want to switch banks. Now, I assume the actual number who will is a little lower because they're obviously, it's one thing to say something, it's another thing to actually do it. But I guess my question is, what do we feel is driving that? Like, where are their financial institutions maybe coming short, or where are there some opportunities that they could better retain that customer base?
Well, I see. This is such a surprising stat to me because I view it as like, oh, people just stay, they just stay. Nearly 20 years. I think I wrote a report, I don't know, a handful of years ago, but it's like, whoa, you're glued in longer than your marriage. And I think what we see a bit more. So I would. Again, like you said, people say something and they won't do anything, but I do not think people are running off to sign up for bank accounts. I personally know people who had phony accounts opened at Wells Fargo and stayed with them just because what a pain to leave in theory. I mean, in reality, it doesn't have to be that painful if your situation's more simple, but I don't think people really drop. What they do is they add on like, hey, you're not giving me what I need. So let me throw in, a chime. Let me throw in who knows what, maybe a green light, could be anything. But I think it's sort of like a pile up effect because what makes someone leave? Yeah, I think someone who gets really mad will quit. I once quit a bank account when I was like, oh gosh, man, I fell into that trap of the overdraft fee of like, I was the literal stereotype. I bought a coffee. I played it too close. My first job in New York City. I had a little salary, let's say. But I remember I got like 3 or 4 and I'm like, I'm done with you. Right. And then I blogged about it. It was kind of fun. But I think that's like usually the motivation that's needed versus like, or you move, that's a thing, right? Or, you go to school, that's a motivation. But yeah, to be done with the bank without a problem seems like the rare move. But Tara, what do you think about this? Yeah.
I wholeheartedly agree with you, Mary. They're simply diversifying their financial services journey versus making that complete switch and shutting down the account. So in baby steps, they're breaking up with you, but they're taking it slow. I think it's clear they've hit frustration somewhere along that journey. They may have received an embarrassing decline, like you just mentioned. That's probably not enough to do it once, but multiple when they don't have the right type of intelligent overdraft services and really know the customer to prevent that type of activity. Then, that likely leads to it. But I recently read an ABA survey that really backs us is the reasons they leave are a security concern or a fraud event, followed by a bad customer experience. But other than that, they're slowly diversifying. So if you take like a single prop business that is running out of a standard consumer DDA account and they're frustrated, they're not necessarily leaving the bank. They're just bolting on all the solutions that they need. And they're starting to accept payments in a disjointed way, and they're settling invoices in another way. So I think the opportunity
build a bank.
Yes,
yeah,
exactly.
Build a bank.
Exactly. Yeah. But I think the opportunity for banks here is data's everything. And with tools like AI and the right data access, like that is only improving for us to really monitor like the right type of behavior for deposit leakage and attrition. So such a great opportunity for financial institutions to take action before it's too late, before they break up with you.
Yeah. Or just ghost you. Like, that's right. I'm here, but
Ghost.
I'm not here. Yeah.
Yeah. Even worse. Ooh.
Yeah, that's the worst.
You mentioned earlier that there are a little bit of Tara, I think you said like the value will depend on the generation, right? Whatever you're giving to them. And I wonder, like, how are we seeing banks sort of balance that? Because there are a lot of different expectations depending upon who you're catering to. I mean, we know that digital is essentially the norm now for the most part, although some people still want to go into the branch and all of that. But yeah, how are banks striking a balance?
Gosh, I think oddly, right? Like, I think it's a really hard thing to balance, to be all to everybody. I don't think you can totally do it, but I guess the most general sense, it's like, oh, you have an app that offers everything, and hopefully it's pretty simple to use, just a couple of taps. And that's sort of the way. But it's always that dance of like, I think it was Simple that did this, when they cut off like the checkbook or something, it caused an uproar. So you wouldn't think that there's a digital bank. Like, what's going on here with it? So like, it's just really hard to do it all, let's say. Like, I think it's like an impossible journey. But, one thing you'll see, not often, but sometimes, maybe a community bank, certainly more like a credit union. If they're trying to reach Gen Z, maybe they partner with an influencer to like just get their brand in front of the audience on, TikTok, which of course is a dicey area right now. But that would be one way. Money clubs, I've heard. Maybe that wouldn't be the language a credit union would use, but it would be like, there is an odd thing where some, like Gen Z does not give up on the branch. Now they might be going because they're confused or whatever, but there's this an idea, and I love this idea. And it's like making it like cool, like a money club within the branch. So it's like it's funny to say, it's like the hip money
like
session.
A book club, but a money club?
Money club. But I know fintechs have done this. I think a bank credit, you might struggle a little bit in execution here, but there are things worth trying, let's say.
That's awesome. Yeah, I think there is a difference in the times we're in now, but not in all ways. Like boomers, for example, they're gaining steam on the preference of digital banking versus in person. And we didn't ever think that would happen, but there's over 50% of them that prefer the digital channel first and foremost. So with boomers, it's a nice to have. And for younger generations, their expectations are higher. They have that instant gratification expectation. It's just everywhere. Like the average attention span of a Gen Z is, Saxon, Mary, give it a guess. How long?
Oh gosh, 10 seconds?
Yeah, you're spot on. 8 seconds. Like, yikes. Squirrel.
In their defense, all of ours are much shorter than they used to be.
Yeah, totally. I agree. But I shared this example in another podcast. So Saxon, you've probably heard me talk about this, but I was testing a fintech app with my son, and he was 12 at the time. And I let him know I sent money on a Friday. He asked about it all weekend long. So he texted me from the school bus on Monday. Said, Mom, are you really just broke? Tell me the truth. It's not here yet. No, obviously, the scenario at hand, it wasn't using instant rails. We knew what was going on, but he didn't get what he expected as quickly as he expected it. So how many of us are guilty of those very same expectations with service, with products, with feedback, with shopping? It's everywhere. So even with the younger generations, they don't want to interact with a human until they want to and until they have a problem. And then it has to be quick and seamless. So it is a fun balance of, exactly what Mary said.
You just reminded me, someone once mentioned to me they thought it might be a good idea for financial institutions to try out building a community through a newsletter and but keep it short. These are really hey, this is the average amount someone's spending on a date. It's just again, who are you going after? What will they care about in terms of money? And then serve up some tips. But we're talking quick bullets, short form, almost less than a paragraph.
Yeah, it's awesome. Okay, I'm going to transition us into the lovely topic of AI and the hype cycle of what's ahead. So as we move into the era of using AI holistically and trusting predictive analytics, Mary, what excites you in this space today? And can you kind of speak to what the journey looks like ahead?
Yeah, well, excites me, horrifies me. I'm getting my sea legs here because, of course, I think first of content. And I'd say, it's definitely banks and credit unions, whether the executives know it or not. People are using these tools, and they're likely using it for marketing in some way. And the thing I would say is mind that, because from my exposure to it, it's can really serve up some silly things that would be really embarrassing to put out. What I'm finding is if you have someone with actual skill in the room, they're going to see the issues, whereas someone else might not. So just keep the talent there. So that's just from a content standpoint and the fact that, yeah, it's definitely being used. But like an example that's exciting, or could be, this was referenced in Ron Shevlin's What's Going On in Banking report that just came out not too long ago. And he was citing South State Bank as a great example of, I think, what it calls auto GPT. And it was like using it to like build up its deposits. And that was just like one application of it. So it's like, to me, that's like a really interesting thing. If you can like grow faster, quicker. I know from a fintech startup perspective, the rhetoric is, wow, with Gen AI, we can just build things quicker. We can do a mock-up quicker. So like in theory, maybe there's even more fintech companies coming for us.
What do you think, Saxon?
I'm just so glad Mary said the thing about marketing, and you see all these like as
silly things.
You know, as another writer, you see things that it's silly or it's phrased in such a way that's like very clear that it was just auto generated, So that human touch I think is huge, and especially when we talk about in banking, like not losing the human component is really important.
Yeah. Except one exception, I think because I've been forced to edit pieces like this. What are the top 5 bank accounts? I think there are great uses for writing content for like something that's like that. The FAQs, let's say, the FAQ section. Yeah.
Or like, ideation or outlining, some of those kind of rudimentary things. But it's, when you think about like AI in general, it's kind of like the Wild West. I kind of agree with Mary. It's really exciting, but it's also like kind of scary at the same time, just kind of looking at everything. How it could go versus how it will, and all of that.
And it's inevitable. Of course, I wish it would use to be like more useful for like crunching numbers for people, but it's not actually very good. The large language models aren't actually really good about that. But I wish that was where we were at right now. So it was like people could manage their money more easily because of it. But I'm sure down the road, it's so
when we can trust it a little bit more, like the opportunity and the risk when those meet. But there's so much ahead that we have to look forward to there. Mary, so you touched on the What's Going On in Banking report by Ron Shevlin. There's one other area I want to hit there. And it was an area titled FinTech Partnerships. So Happy Together. Pretty stable results for growth and interest for fraud and deposit-related fintechs, those investments, but also seeing some more interest from credit unions on fintechs and maybe a little downtick on the bank side of interest in fintechs. So talk to me about that. What's your take on the relationship between banks and fintechs today, and have we reached that more collaborative ecosystem?
See, I can't wait to really, really know the answer to this, because I find it fascinating that the data was showing that like, hey, credit union execs are saying, they see fintech partnerships as a major way to grow. And it's ticking up over the years, while the banks, it's like ticking down. So you have to like think, what is causing that? And I guess just as an aside, anecdotally, I see a hunger from credit unions to want to work with fintech companies, especially to go after Gen Z, since their membership base tends to be old. So it's like a natural pairing. Of course, you'd think this is how I'll grow. But yeah, why the bank? I don't know. I mean, Synapse happened. I think that was an incredible moment for the industry in a very bad way, but certainly, the risk averse, AKA our industry, I'm not going to want to be like, hey, let me work with you here, and there. So like, I think the ripple effects of that are yet to be seen, but I just have to believe there's a strong reaction to that. Nobody wants to be the bad headline when they're trying to, in theory, like partner with a fintech that like helps someone improve their money.
Yeah, and I hope for more regulation friendly around encouraging the banks to dive in on that. I think there's so many success stories that we could point to, and even successful fintechs like Z Suite. They've originated within the walls of a bank, and they spun out to continue to build and expand and serve more FIs. But here's where I think we, from a CSI perspective and core, hold a responsibility and an advantage, because not every financial institution, not everyone is structured in a way that they can negotiate, integrate, and take a fintech to market. But we can for them. And that's a commitment from us too. Like, how do we do more of this for the FIs, and how do we enable, those that want to move at their pace with their very own strategy and do so feasibly with the right processes and accessibility. So I think the beauty of all of that is that the consumer ultimately wins so that the FI wins. It's not a losing game to fintech at all. It's an opportunity to collaborate. And I hope in the years ahead, we see more regulatory support behind that.
I saw in a Forbes article recently, they had a very clever turn of phrase. They called it a phase of co-opetition. So it's like a mixture of competition and cooperation. I think when we look at this, look at individual fintechs, it depends. There's so much variability. We see obviously the opportunity for collaboration, as you're saying, Tara. Like it's pretty much now standard practice where we see mutual benefit with the core provider working with a fintech. Things like data analysis, credit scoring, all these sorts of topics. But then you also have plenty of fintechs in the space that at least from my perspective, and you two would probably know better than me, seem pretty comfortable in their role as kind of a little bit of an outsider, a disruptor of sorts that's catering to these niche markets, depending upon the fintech.
Yeah, I think it's just a mixed bag. Certainly, I would say the industry is much more used to interacting with fintech. You can see it at conferences where it's like less like here's the suits, here's the hoodies. It's more like combined, and it's rarer to hear like a fintech company be like, I'm here to destroy. The worst thing that they always said, I'm here to eat your lunch.
Yeah.
Right.
I hope I never say that in a real way. But I just might test it out on some friends. But you see less of that because it really should just be about like, hey, I'm improving something or I'm solving a problem.
Yeah,
makes sense.
And no more suits and ties, all Patagonia bags, right, Mary?
Yeah.
All Patagonia bags.
Oh, gosh.
Saxon's got one on now.
Don't mock the Patagonias.
Didn't it get like, they're like, hey, we're stopped providing these for like financial services companies.
Yeah. They're going to be restricted at the conference doors. No vests allowed. No more. We're done.
Hey, we got to fit in somehow.
Okay, for a fun one, little spin on what stands out to you, Mary. What have you seen that either surprises you, makes you laugh, or as a consumer yourself, frustrates you? This can be anything. So just a fun little shout out.
I will give a shout out to one of the episodes I did not too long ago on Money Isn't Everything when I was interviewing a cards expert, and he was just making it known to me like, hey, card design really matters here. But his point was the date test. Like, would you be embarrassed to use this on a date? So like that was funny to me because he was talking about like a smiley face on a Walmart card and like how they got in front of that issue. And I thought of like my hygienist was talking to me and basically saying she was on a date and her date threw down like a 2-for-1 special. And she took it in a bad way. I took it in like, that's kind of cool way. But, so to me, it's very surprising, like what's embarrassing to people. And Tara, I know we've talked about this, but like it changes with age because, Gen Z, for example, there's stories out of like how they love using AARP cards because there's no actual age requirement. So they'll use it to get their discount. So it's just like, what is embarrassing for you? For me, it would be a crypto debit card, for example. And I know, it goes back to this dog park in Hollywood. So it's very specific. But what surprises me, will be what's next for 1033 for the CFPB's open banking rule. I would say.
Do you have a magic 8-ball there?
Oh, I love using a magic 8-ball. I'm like, what's the day gonna bring? But I do think like, hey, it's here, regardless of the rules or not. Like consumers are sharing their data, and just whether it's more secure and reliable or less. So I think that's also inevitable.
I love that. And for the record, I would rock an AARP card. But yeah, you're right. Most people above a certain age, they don't want to, proudly rock that. But I'll take your card if you need me to. All right. Well, Saxon, I think we are about up on time. So any final recommendations from either of you for financial institutions out there?
I would say one thing that I have loved in interviewing people is just like in banking, like banker types, like what is creatively inspiring you? And Jim Bruni, who has long been creative type, he runs Finovate or ran Finovate and, used to work at like US Bank and whatever. But he said, hey, he used to like think through ideas when he was at the ballet with his wife. And so I just think about that. Like, I think it's a reminder because it's like you're so deep in spreadsheets or whatever your day looks like. But like to have that like fresh thinking, fresh approach, you need like sort of the environment. I mean, it doesn't have to be art for me. It's always going to be art, or nature. But like to keep that in mind, like, hey, you got to get outside of your typical day if you're trying to rethink a business model.
I love that. What about you, Saxon?
I can't top what Mary just said. I think that's a perfect way to end this conversation, actually. Mary, this has been a real pleasure. I really hope we can do this again sometime.
No, it was fun. Thanks for having me here.
So that brings us to the end of this episode of Banking on Community. This whole relationship between financial institutions and consumers, it's as you all know, an ever-evolving topic. So no doubt we'll return to it soon. And we've really enjoyed talking with Mary from Cornerstone Advisors about it. Thank you again, Mary, for sharing your perspective. And thank you all for listening. You can subscribe to this podcast wherever you get your podcasts or see us on video on YouTube. You can also follow us on most of the social medias and can submit questions using the hashtag BankingOnCommunityPod or send your questions at CSI Solutions on X or on LinkedIn. And you can also learn more about who we are and what we do at csiweb.com.
Or even better, join us in Orlando at CX25, March 31st.
Yeah, come say hello. We'd love to meet you. And stay tuned because, like I mentioned at the top of the podcast, we're going to have some live streams and some new episodes coming out during that little stretch. I've heard that the one and only Brett Glover will be giving out autographs.
Oh, goodness.
Just what we needed. All right. Thank you, everybody, for listening. We'll see you next time.
Thanks, everybody.